But just to get a sense of the mood in the markets right now and really what could happen, we have with us Ipek Ozkardisky joining in. She's a market analyst at London Capital Group. Ipek, thank you so much for being with us on the show today. Do you think the markets are getting it right?
Well, it looks like the market has been mispricing the close call on the opinion polls, because we have seen that over the past 4 days, the markets have rallied. Both the British pound and the FTSE stocks have had a significant pickup over the last 4 days. This was completely unexpected, and the reason why was a couple of opinion polls which were in favor of a Remain vote rather than a Leave vote. But at the end of the day, we cannot rule out the fact that before this week, we have seen some other opinion polls which were in favor of the Leave vote. And if you look in general across the market, it seems like the opinion polls are still too close to call. So we are just afraid that the actual optimism in the market is mispriced. There is one thing which is sure: maybe the optimism is not mispriced, but the risks are clearly being mispriced here in London today.
Completely get what you're saying, Ipek, because it's almost a little scary, this one-way rally that we've seen, an overwhelming sense that the only options on the table seems to be a Remain. That's not the case, because the opinion polls are telling us a very different story. So let's actually take both the scenarios. If it is Remain, then maybe we get some additional moves. But if there is a Brexit, that's the worst case scenario, what does that then do to the currency market? What does that do to risk assets like equities?
Well, first of all, it is worth mentioning that the market is very well hedged against the Brexit risk, but this does not mean that the market is pricing in the Brexit as a base case scenario. This means that the potential on the upside as a knee-jerk relief rally is limited. However, the potential on the downside appears to be much larger, simply because the market is not pricing in a Brexit and even less over the last 4 days. This is why I think that the event that is priced in as a tail risk could be a real danger if a Brexit really happens. And this is why I think that it could not only cause a high volatility in the market, but it could also be a very damaging sharp drop, which would be very much unexpected. And this could even lead the Bank of England to take some additional actions in order to calm down the panic in the market. So I believe that a Brexit situation would trigger a real panic across the UK and the global markets, simply because it's not clearly priced in.
How much downside are we talking about? I know these are guesstimates at this juncture, but I mean, your best thoughts and analysis. For equities, how much downside are we talking if indeed the UK decides to leave?
So if you're looking at FTSE 100, so first of all, we expect the small and mid-sized businesses to be most heavily impacted. But now I'm just going to focus on the FTSE 100 stocks. So on the FTSE 100, we have reached the 6,260 to 380 levels today. I believe that a Brexit vote could bring this market down to 6,000 level and even 5,800 as a knee-jerk reaction. And from there, we would see how the impact of the renegotiations would be on the big UK caps in order to reevaluate or reassign a value to these companies across the board. On the pound market, it's easier, actually. We have these implied volatilities on the GBP US dollar spot market, and the market prices in a drag down to 130 levels. This is, of course, a midterm view from 3 to 6 months if a Brexit event happens. So we can find the pound trading against 130 against the US dollar if the UK decides to leave the European Union. And the short-term knee-jerk implication would be a sharp drop, a sell-off below the 140 level by the end of the week if the Brexit happens.
Yeah, I know we've heard that 130 level in some of the polls that we've conducted here in India as well. Experts have been saying that could be a reality if there is a Leave vote. Final question then, Ipek. If there is a Leave vote, to what extent do you expect the ripples to travel to emerging markets like India? And, what would be the slightly longer term or medium term impact when we're talking about emerging market equities?
Well, if you're looking at the short-term impact, is going to be a chaotic market environment, simply because the risk appetite would be seriously harmed. In the midterm, however, if you're looking at what would happen, this is a situation, a political situation between the European Union countries and the UK. At the end of the day, there is one thing that everybody should keep in mind, is that if the UK steps out of the European Union, this does not mean that the UK will stop trading with the rest of the world. It could actually give the UK the freedom of negotiate its own trading terms with other countries. In this perspective, we do not expect the countries, other trading partners, as the US, as Australia, as India, China, to get heavily impacted by UK exiting the European Union. I think that the major damage would be on the European side, but not for the rest of the world.
Ipek, many thanks for joining us on the show today. Appreciate you being with us on this very important event.